Today, we're joined by Rhylin Bailie. She's the Vice President of Investor Relations for Equinox Gold. They've had tremendous growth over the last 6 to 7 years, bringing them up to a point today where they're poised to be the second largest gold miner in Canada. It's an incredible story. We're going to talk briefly about what's led them up to today, but also the exciting period, transformative period that the company's moving into after a recent merger with Calibre Mining. Rhylin, welcome to Ron's Basement.
Thanks, Ron. This is exciting.
Yeah, it is exciting. In full disclosure, I've owned the company's stock for over 6 years. You and I've talked several times over the past number of years, but I remember 6 years ago, this was a smaller company started by Ross Beatty with this lofty goal of getting to 1 million ounces of gold production. And it feels like we're kind of knocking on that door right now. What's the journey been like over the last 6, 7 years?
Well, Ross does like to say he started the company and we let him go with that, but it actually started before that. So I was employee number 6 in 2016. Okay. And at the time we had just one development stage asset in Brazil with a vision of being a mid-tier gold producer. And the first transaction that we did was in March of 2017. We merged with a company called JDL Gold that had some copper assets and some cash, and they wanted to bring some gold into the portfolio. And then very quickly on the heels of that is when we did the merger that created the Equinox Gold that you see today. So that was when Ross joined us. So we did a merger with 2 other companies in December 2017. So we sort of say the start of the company was December 2017. And Ross Beatty joined us then as our chairman and our largest individual shareholder. Ross, for people who know him, is an incredibly successful resource entrepreneur. He's a geologist, so he knows what he's looking at. He's built probably 30 resource companies. If you don't know him, I highly encourage you to Google him because he's an amazing human being, but also incredibly successful as an investor and a company starter. So probably his most famous company is Pan American Silver, which he started about 30 years ago. It's the world's second largest silver producer now. And then at the time, so this was at the end of 2017, gold was around $1,300 an ounce, and Ross felt like gold was poised to start to run, and he wanted to build a gold investment vehicle. He already had Pan American Silver, which was his silver. He had started a green energy company called Intergex. That was his green energy investment, and he wanted a gold investment vehicle. And he said, we're going to build a gold company. We're going to make it 1 million ounce a year producer, and we're going to do it quickly because we want to achieve that maximum production when gold prices peak. And he sure called it because gold's at $3,300 an ounce, or probably even higher. I haven't had a chance to check this morning. And of course, if you're going to build a big gold company quickly, you can't do it through exploration and development. You need to do it through M&A. So it's been a pretty busy 7 years, lots of transactions. We bought a producing gold mine in 2018. That's Mesquite, our mine in California that's been producing since 1986. So people who say, oh, you can't produce gold in California. Well, yeah, you can. We've been doing it for decades. And then in 2020, so March of 2020, we bought Leah Gold, which gave us a big mine in Mexico and a portfolio of mines in Brazil. In April of 2021, we bought Premier Gold, which gave us our flagship Greenstone mine in Ontario, another mine in Mexico, and some very prospective exploration properties in Canada. And then, of course, most recently in June of this year, we completed our merger with Calibre Mining. And the merger with Calibre feels like it's that final piece in the puzzle. So we've been working to be the 1 million ounce a year gold producer. We'll be there we should be there next year. So it's just we can see it. It's just that close now. Yeah. And the way we're going to get there is Calibre brought some producing assets in Nicaragua, a small producing mine in the United States, but most importantly brought us another mine in Canada. So we've got our big Greenstone mine in Ontario. Calibre was just finishing up construction of a mine in Newfoundland, Canada. So with those 2 mines together under one umbrella, we will eventually be the second largest producer of gold in Canada. So that was the real driver behind that transaction with Calibre, was to get those 2 big Canadian mines. Our Greenstone mine will produce probably around 350,000 ounces a year. The Valentine mine in Newfoundland is expected to produce close to 200,000 ounces a year. They're both, Greenstone's ramping up to capacity. It's been in production since last year. Valentine's expected to pour gold at the end of Q3 and be ramped up by around the first quarter of next year. So by the middle of next year, we'll have those 2 big mines producing at capacity. Now you're looking at 550,000 ounces a year coming just from Canada. And if you look at the mining portfolios, you'll find that the companies that are producing predominantly from Canada do tend to trade at a premium in the market. So we're hoping to bring that premium to our shareholders. So that was the driving thesis behind that. But then, of course, we also got this fantastic team. We were a bit light on the operational side. We've had a bit of a hiring freeze for the last couple of years because we were building Greenstone. It was capital intensive. We didn't want to be, we wanted to keep that money going into the ground and not get too thin in the treasury. So we haven't been adding new people to the team, but we were expanding. And so with Calibre also came an incredibly successful operations team. And I think that's sort of going to be the key to success going forward, is having these big mines, lots of production, but also having additional operations expertise.
Wow. So when Ross Beatty says he wants to do it quickly, he wasn't joking around.
No, yeah, it's been a very busy, I guess 7 or 8 years, but it's so exciting to just be on the cusp of achieving what we set out to achieve. And so the mission, like I said, it was to be a 1 million ounce a year gold producer, have a lot of gold in the ground. So we've got 23 million ounces of reserves, 22 million ounces of resources. So I sort of feel like we've checked that box. And now the new mission with the new team is double the share price. So if despite all the growth that we've achieved over all these years, from zero production to 850,000 ounces this year, that's the midpoint of our guidance, hopefully 1 million ounces next year. Despite all that growth and despite the gold price where it is, you're a long suffering shareholder, the share price hasn't really moved. And so the new mission now is double the share price. So
yeah, but one thing that always gave me solace was knowing that Ross was personally invested heavily into the company, and that the management team also was personally invested in the company, and that there was and I was told this, and I think I observed this, that there was an owner's mentality within the management team at Equinox.
Yeah, we've all put our own money into it. I like to joke that from a net value perspective, I've actually invested more than Ross has, because I'm not a billionaire. Right. But no, we've all put our own money into it. This is, not options that were granted. This is money that we took out of our pockets and put into the company. And same with the Calibre team. So all the Calibre executives that have joined us, they were incredibly invested in Calibre. And of course, all those shares transferred into Equinox Gold shares. So very strong insider ownership. We're at about 4.5%. If you look at our peers, I think that's the second largest insider ownership in the industry. Second by a lot, like the graph goes everybody else and then us. And we have an employee share purchase program. So I think about 80% of eligible employees are buying shares every single month.
Okay. And you mentioned something interesting to me. There's 23 million ounces roughly of gold reserves and resources in the ground. And if my math is correct, Rhylin, if you're doing about, at some point here soon, around 1 million ounces a year, that's almost 23 years worth of production runway potential ahead of you. Plus, to me, that's a lot. That's important, because I know some of the big gold mining companies will be producing a lot, but maybe they haven't invested in their pipeline. And is that safe to say that that's a pretty healthy reserve for a company of your size? I'd like to thank the sponsor of this video, First Mint. They're a silver mint located in Las Vegas, Nevada, creating world-class silver bullion products. As a matter of fact, here's a 5-ounce silver bar. You can check this out for yourself on their website, firstmint.com. A couple of things unique about First Mint. They're owned by First Majestic Silver, headed up by Keith Neumeyer. So they're getting the silver out of the ground to the mint, to you, from the mine to the mint. Again, you can check them out at firstmint.com. Thank you to First Mint for sponsoring Ron's Basement and sponsoring this video.
Very healthy reserve, yes. And you don't collect all of that gold. There's a recovery percent. Course. So it depends if it's going heap leach or into a mill, but sure, 23,000 ounces, 1 million ounces of gold is a very respectable reserve. We've also got the additional 22 million ounces of measured and indicated resources. And so the goal then, of course, is to do infill drilling and convert those M&I resources into reserves. And that's what allows you to carry on mining. But we're also doing a lot of exploration. We just this morning actually announced exploration results out of one of our Nicaragua properties. Yeah. So it's just by virtue of mining, we're constantly depleting our product, right? So you do need to be exploring internally or doing more M&A to buy more ounces. So we've got quite a healthy exploration program going on this year. Around $80 million will be invested in Nicaragua. At Valentine, they discovered a new deposit at Valentine. And so they're doing more exploration to hopefully prove that out and bring it into the mine life. We've got 4 million ounces in an underground deposit sitting underneath Greenstone. So we'll be doing some exploration there in the near term to bring that into the mine life. We're doing an underground expansion at our Aurizona mine in Brazil. So we're actually going to start the portal development later this year so that we can go in and start doing some bulk sampling and some underground drilling. So we're not only looking at sort of infill drilling that builds up your reserves. So the goal is to replace your reserves every year, and we've consistently done that, but also to find that next generation of mines that will be able to come into the pipeline down the road. And so we're doing quite a bit of regional exploration as well at our properties.
Okay. I want to touch on something you mentioned earlier that I myself kind of feel and have observed as following the company closely. And that is over that 6-year period that you described with all this massive growth, all these acquisitions. Growth is disruptive in some ways, challenging, expensive. But it feels like the company is now right at maybe a tipping point or a transition phase where they can begin, where you can begin, we can begin to harvest some of the gains from all that work that's gone in, all that money that's been spent. Is that a safe assessment of where we stand?
Absolutely. Yeah, and I think that's a big reason of why our share price is where it is that we have been growing. We've been growing our production year over year, but we've also been spending quite a bit to build new mines. So we've not only done the acquisitions that I talked about, but we've also built 4 mines along the way. So we've built 2 mines in Brazil, one in California, and most recently our big mine in Ontario. And that was, $1 billion investment.
Yeah.
And the market doesn't like development stage risk, right? Because there's always things that go wrong with the build. There's lots of mines that have been built recently that, their capex doubled, their, timelines got stretched out by a year. So despite the fact that we built Greenstone on time, so we said we would pour gold in the first half of 2024, we poured gold in May. Despite the fact that we said we would, build it on budget, and we were just a hair's breadth away from being on budget, which I think is a pretty impressive achievement in that inflationary environment. If you cast your mind back to 2021, 2022, input costs were just going through the roof and supply chain delays. So the fact that the team was able to keep it on budget is extraordinary. So despite the fact that we achieved those 2 things, we're still basically trading like a developer. So I think until Greenstone is fully ramped up and the market can go, okay, phew, everything's working the way it's supposed to work, we still have that development stage discount baked into our stock. And then if there was the only complaint that we got from Equinox Gold shareholders when we talked about the Caliburn merger, was they're like, oh, I felt like Greenstone development risk was pretty much done, and now you've introduced new development risk with the Valentine build. So I think you probably won't see those 2 mines fully valued in our stock until they've both been operating at capacity for a few quarters. So maybe by the middle of next year. But, to your point, we are at that tipping point, right? We've been building, acquiring. And now we're tipping over into that cash flow stage, which is what we've been working toward from the beginning. So if you look at where this company is today and where it's going to be a year from now, we'll have those 2 big Canadian mines at capacity. All of that development risk is behind us. An incredible amount of cash flow coming out. I mean, if these gold prices hold, our all-in sustaining costs next year with those 2 mines ramped up should be maybe $1,500 per ounce. I mean, forward-looking statements, this is not guidance, but as those bigger, lower cost mines increase their production, the costs come down, right? So we should see significantly lower costs next year. Now you're locking in a margin of like $1,500 to $2,000 an ounce. If we're producing close to 1 million ounces, that's a lot of cash flow. So now you've got your debt paid down, and then we can do that final thing that we've been promising since the beginning, which is returning capital to shareholders. So from the beginning, Ross is like 1 million ounce a year producer, and we'll be paying a dividend because he's an investor, right? He's our biggest investor. He wants a dividend. So we should be in a position to do that by probably the end of next year. So it'll probably be a combo of a dividend and maybe some share buybacks, depending where the price is. But that's sort of what, then you've made it, right? If you've got steady state production, solid cash flow, you're returning capital to shareholders, plus you've got that pipeline of growth so that you can maintain that production. That's what we've been working for at the beginning, and so close. It's like a year away.
Yeah, yeah. No, it feels like it's happening from my perspective, and I want to talk about the future growth of the company. But first, I want to touch on Darren Hall, who is the CEO of the newly emerged companies, and just touch on Nicaragua, if you will, because I read about that mine, and from what I understand, when they took that mine over, it was near the end of its lifespan. But and we know we got some great drill results out this morning, but they really expanded that and grew that organically. Is that correct?
No, they've done a fantastic job in Nicaragua. They bought it from B2 Gold. I can't remember what year it was, but you're right. It was had, just maybe like 200,000 or 300,000 ounces of reserves. Now they've built that up to over 1 million ounces of reserves. Plus they've produced 1 million ounces of gold. So that was a real turnaround story where they took a mine that was supposed to be closing down and said, we see lots of opportunities here, did a ton of exploration, have been very successful. And it's been a great cash producer for them. Nicaragua, for us,
Yeah.
we're one team now. And Nicaragua is a bit of a different operating model too at first glance, because it's got two mills. It's what's called a hub and spoke operating model, where there's two separate mills and multiple deposits around the country. And so they just, whether they're open pit, underground, they dig them up and they drive them sometimes hundreds of kilometers to process it at one of these mills. And there's great infrastructure in Nicaragua. Like you could never do that in Brazil because the roads are not well enough maintained to want to be driving anything 200 kilometers. But in Nicaragua, I haven't been there yet. I'm very much looking forward to doing a site tour, but apparently the roads are fantastic, good security, great country to operate them. And they did to dig up from wherever they've discovered the deposits and truck it to one of the mills. And they've actually had incredible permitting success as well, which shows the government and community support. So they've been able to take deposits from discovery through to production in less than 24 months, multiple times. Wow. So we're the largest producer of gold in Nicaragua, which obviously, you're paying taxes, you're employing people, that brings you a lot of support. So it's been a really impressive success story there.
Yeah. So right now, with Greenstone and Valentine, obviously the opportunity to become the second largest gold producer in Canada. But when I look at the other projects that you guys already own, right? Castle Mountain, the big opportunity in Mexico. I mean, there's already things in-house that could generate kind of big growth here in the next 5 to 10 years. Is that a safe statement?
Absolutely. So we're still a growth focused company, but the key is that we don't need to do any more M&A to achieve that growth. So that's a big sort of another check mark, I guess. So we've been doing all this M&A, like you said, it's capital intensive, it's time intensive. Like it's a big process to integrate an asset, integrate the teams, for the accounting team to have to figure out how to do the accounting treatments every time you take something over. So hopefully that is mostly behind us now, and we can just focus on the assets that we own and then delivering that growth. So just if you look at the portfolio that's currently in production, so Greenstone, we're going to produce 850,000 ounces, our midpoint of guidance for this year. That's only 240,000 ounces from Greenstone. But when it's ramped up to capacity, that's expected to be closer to 330, maybe 350. So you've got about 100,000 ounces of growth coming from Greenstone alone in just the next 12 months. Then you've got Valentine coming into production. So it'll pour gold around the end of Q3. You'll get a little bit of production in Q4, but then it's ramped up next year. So you have another close to, 180, 200,000 ounces coming from Valentine. Then you've got the assets in Nicaragua, in Brazil. And then we've got, like you said, so that's just very, very near-term growth, right? You've got, almost 300,000 ounces of near-term growth coming in the next 12 months. Then you've got Castle Mountain. So that's our mine in California that we're permitting. Again, people say, can you permit a mine in California? Well, the key to success there is that this was a mine that was already in production. So it already has operating permits. We're just permitting an expansion. So that will be Castle Mountain Phase 2. It's expected to produce over 200,000 ounces per year. Wow. And the new Trump administration is very supportive of resource extraction. Gold was declared a critical mineral, and we've been accepted into the Fast 41 program, which is a program that's intended to expedite permits for critical minerals. So we expect to have the permits for Castle Mountain around the middle of 2027. Let's say it's a 2-year build. So by the end of 2029, now you've got Castle Mountain ramped up to capacity. So now you've got Greenstone, let's say 350, you've got Valentine 200, Castle Mountain 200, all of that coming just from Canada and the United States. So that alone is a company builder, right? But then we've also got the Brazil assets, the other mines in California, the mines in Nicaragua. And then, like you said, we've got this wild card in Mexico. So Los Filos, that could be a whole nother podcast just talking about Los Filos, but it's a mine that was in production. We needed to renegotiate the community agreements with 3 communities that we work with there. We were successful with 2 of them. One of them has decided not to sign any long-term agreement. So we unfortunately had to shut that mine down on April 1st. It will come back into production one day. And when it does, it's expected to produce, again, well over 250,000 ounces per year. The only question mark is timeline. When will that happen, right? So we've guided to the market not to expect any production from Filos this year, potentially next year. But when it does come back into production, now you've got another big long life mine in the Americas. So a lot of growth built into the portfolio. Some of those assets will be divested. We do not want to have 11 producing mines long term. So you should expect to see some asset sales over the next sort of 6 to 12 months. And of course, the profits from those will get put right onto the debt. So, we're building cash flow, building production, also paying down our debt, and all of that leads to the objective of returning capital to shareholders.
Awesome. 2 more questions if you have just a few more minutes for me.
Yeah.
When I think about the general market for gold mining stocks, obviously it's been quite suppressed over the last 10 years or so. I feel like that's starting to change. And I think that as we get through this most recent earnings season, I know Thursday of last week, Newmont Mining put out really blockbuster earnings, that we have the potential for some of the generalist investors to join us. And it feels like that could be aligned at the same time that Equinox is, like we've talked about, kind of pivoting into this new phase for the company. I think it presents a very exciting opportunity. Any thoughts on what you see in the kind of the general gold mining sector stocks at this point? First Mining Gold is a Canadian gold developer with 2 multi-million ounce projects in Canada. Springpole in Ontario and Du Parquet located in Quebec. Millions of ounces of gold in the ground in Canada moving through the permitting process. The company has 0 debt and many big catalysts on the horizon.
Yeah, it's been interesting because the generals have been taking meetings for a couple of years. So they're certainly sniffing around, but we haven't seen them taking large positions. So I think certainly the fact that, gold is holding steady at these prices, it's not good when gold rises too quickly because then people expect it to fall quickly. But it's been holding pretty steady at these levels. If you look at all the macroeconomics around the world, unfortunately, gold does really well if there's turmoil, right? If there's wars, if there's global unrest, if there's political unrest, that's when gold tends to perform better. And none of that seems to be going away, unfortunately. Unfortunately for the world, but good for the gold industry. So all of that's in place. And we're hoping, the thesis again behind doing the merger with Calibre Mining is that we're hoping that by having predominantly North American assets in our portfolio, that will give the generalists the comfort of going, okay, well, I need to get into gold. I'd rather get into something that seems a little bit less risky. And so we've, by being in North America, which, Canada, the States that are obviously very mining friendly jurisdictions, we're hoping that will lead them toward Equinox Gold as their investment of choice. And we are starting to see the gold equities sort of bridge that gap between gold price. Usually they're quite aligned and there's been this huge gap. Like if you look at the GDX and the GDXJ, but they are starting to close that gap. So maybe that means that the generalists are starting to come in. But I don't know if this stat is right, but I think something like less than 1% of global investments are actually in gold. So if that just jumps to 2%, that's really going to make the equities.
It's been a ghost town for people that invest in gold and silver mining stocks, and especially the development and exploration stage. And I agree with you 100%. And I always, and I've said this for years, I get very excited about that because, like you said, it's a lot easier to go from 1% to 2% and get 100% more people in the market than it is to go from 15% to 30%. Absolutely. So, the silver lining, pardon the pun, or the gold lining is that this period of maybe not as much interest as we have traditionally experienced, it could turn into a very good thing for those of us who have kind of, held the line and looked and recognized the real value. And when I look at Equinox, I've always been a big value investor. and I look at the management, and I look at how your team has so much skin in the game, and just all the different factors, I see a great value opportunity. And I'm not a financial advisor. I know you're not either, but I do think that there's great opportunity for capital appreciation within the stock. And I like that you said the team has a goal to see the stock price double, and I think that's very reasonable. So I guess my last question for you, unless you have anything more that you want to share with us, is, if I would have the privilege of talking to you 6 months from now, and everything had gone pretty much to plan, I mean, what's the best case scenario where we may be sitting in early 2026? I know nothing goes perfectly to plan in the mining world, but pretty much to plan.
It is a roller coaster industry for sure. I've been in mining since 1995.
Yeah.
So
Wow.
it's got its ups and downs, and that's the key to success. Of course, is like you want to build your production base. But you also want to keep costs as low as possible. And I think that's where some mining companies go wrong. Is they're like, oh well, gold's at 3,300, we can spend more, right?
Yeah.
And you've got to always be keeping a cost control focus, because the gold price may not stay here forever, right? Some people are calling for 5,000 gold, 10,000 gold. Some people are saying it's going to go back to 2,000. So you
Right.
have to make sure that you're building a business that's sustainable through all of those ebbs and flows. We actually brought in a whole new department a couple of years ago called the Continual Improvement Department. So we've got a VP of Continual Improvement. We've got a VP Procurement now. So trying to make sure that as we become a bigger company, trying to make sure that we've got all those systems in place to make sure that we're being as cost effective as possible, but also giving the teams on the ground the opportunity to say, hey, I think we could be doing this better. Like, here's where we could do some cost savings, or here where's we could recycle the ball mill balls. That's a hard thing to say. And they've come up with all these really cool innovations, because the team on the ground is the one that knows how best to add value. And they're also, if you can get them energized and excited about contributing to the sustainability and the cost production of the company, that's really exciting. That keeps your team engaged as well, right? So, I mean, that's the thing with Equinox Gold, is from day one, we've been focused on building a legacy company. We're not here to pump and dump, right? We want to build a company that's going to be here 30 years from now, that's profitable, that's, a legacy for our team of something that we've created, just like Ross did with Pan American Silver. We want to be able to look back and go, that's really cool. We built something really cool that's bringing value to shareholders, bringing value to local communities with an employee base that's proud to come to work every day. That's what we're trying to build. So despite, I'm investor relations, like I get a lot of heat when the share price isn't performing, but I take comfort from knowing that this company is led by a team with an incredible amount of integrity, incredible amount of belief in what we're building. And when people call me, they're like, should I buy the stock? Where are we going to be 6 months from now, right? I'm like, well, if you're trying to put your kids through university and they're starting in September of 2025, this might not be the stock for you, because there's probably still going to be some volatility as we bring Valentine into production, until Greenstone's fully ramped up and smooth sailing. There's still going to be some volatility in the stock. But if you're looking to put your kids through university in September of 2026, that's a different story. I mean, I'm a shareholder. Like, my retirement is predicated on this stock doing well, and I have zero concerns about where we're going to be long term. I know it's going to be bumpy short term, but long term, I really feel like we're building something that's quite exceptional, and it makes it fun to come to work every day. I have no idea what question you asked me, but that's my answer.
I asked you to give a prediction of the ideal world for Equinox 6 months from now, but I loved what you said. So it was great.
But if you look, we've got a couple of slides in our presentation deck that shows our valuation compared to our peers. Mm-hmm. And if you look, we've got the largest production growth expected over the next 2 years, the second largest reserve base out of the peer group, huge EBITDA growth, huge cash flow growth, but we're still trading at the bottom of the pile. And I have to think that, as we start to deliver on these different objectives, reduce the risk, reduce the development risk at Greenstone and Valentine, investors start to see quarter over production growth, cash flow growth, we have to start making our way up that valuation ladder. Yeah. It feels like we're just so close.
Yeah. And Rhylin, the company's gone through this massive period of growth. And I'm a big believer in this idea that any organization, any company, any great achievement that's ever occurred that's gone through a big growth period, there's always some suffering that goes along with that, and that actually grows the strength of the company, the strength of the management team. And it really feels like to me that right now Equinox is positioned to start to, kind of transition into more of this cash flowing stage. And like you talked about, with all these other internal projects available, I think the future looks bright. I'm gonna look forward to watching it for sure.
Thank you.
Yeah. Well, if there's not anything else that you want to share on behalf of our viewer, I think you've done an incredible job. I think I said this earlier, but I think you and I have talked on the phone occasionally over the last 5 to 6 years. And, it's always a pleasure to get to talk to you because you're very smart, you're very concise, and you're very passionate about what you're doing with Equinox. So on behalf of myself and our viewer, thank you. And we'll look forward to seeing you hopefully in 6 months.
Absolutely. Thanks for having me, Ron.